Hello guys, my name is Behroz. I'm a finance executive by profession and welcome to my channel. Now in today's video, I will talk about that if you are planning to move out of Canada and especially if you're planning to move to US, what are the tax implications that can come across on your principal residence? Now, why is it important to talk about principal residence? It is because in Canada, any capital gain that you have on your principal residence is tax exempt. So let's say you purchase a property for $500,000. If it goes up to $800,000 and you sell it, then this $300,000 that is the capital gain on the property, you paid no taxes on it. So in this video, I will talk about that what if you are moving out of Canada and let's say if you're moving into US, what are the tax implications? There are two kinds of tax implication. One is the tax implication in Canada and the other is the tax implication in US. Because this is your principal residence, you would want to know whether you want to sell it, you don't want to sell it, and what are the different kind of implications on tax. Because if you don't understand tax implications, you may end up paying a big tax bill. By the way, before moving forward, in case you find any value from this video, I have to ask for you. One, press the like button, and second, the subscribe button. On this channel, I share content pertaining to career and personal finance success. So if you're interested in career and personal finance success, then this channel is right for you. Now, one call out that I want to make before we move forward. I am not a certified tax lawyer or tax accountant. This video is only for information sharing purposes because in my experience, I moved from Canada to US like 2 years back and I had to go through all these tax implications. I was briefed by KPMG and PwC who were hired by my company who was making the move for me from Canada to US, and they gave me the entire briefing, all the things that I need to know with regards to taxation, with regards to my stocks, my property, everything. So in this particular video, I'm only talking about the section which is related to principal residence, and this is the briefing that I got from those tax lawyers. I highly recommend that in case you are going through this move, that you hire a tax lawyer or a tax accountant and seek their advice. The purpose of this video is only to give you some rough guidance so you are aware of what questions to ask when you hire a tax lawyer or a tax agent, because their time is very valuable. You are paying for their time. So this video will help you know what kind of questions you should be asking them when it is your time to make the move from Canada to US. Now, talking about a tax accountant and given the importance of you getting the right advice, I will share the link of my tax accountant that I've been using, who give me brilliant advice and are amazing and provide the best service and are very responsive as well and very thorough. So I will leave their link in the description of this video. I've been using them for multiple years and you can check them out as well and get your tax advice, which is very, very, very important. Now let's go into the details of it. So let's say you bought a property. The property price was $500,000 and it moved up to $800,000. And now you are planning to leave Canada. If you sell that property on that $300,000 capital gain, you pay no taxes. However, if you're moving to US and you decide not to sell the property, what happens now? In this case, what you need to do is you need to elect your property for deemed disposition, which is you're telling the CRA that you're moving out of Canada, and it is like a deemed disposition. You're not disposing the property, but you're telling them what is the value of the property at which you intend to dispose the property, which is the fair market value. So here, the best idea is that you check with your real estate agent and ask them to give you a rough estimate or rough value for the property at which it can be sold. Because you're not planning to sell the property, probably you're putting the property on rent. If you're not selling the property, you're putting the property on rent, then in that case, you need to evaluate what is the fair market value of the property. So you bought the property for $500,000. Your real estate agent confirms to you and gives you in writing what is the fair market value of the property. And how do they assess the fair market value of the property? It is by seeing similar properties being sold in the area, similar type of properties, and what is the value of those properties, and basis that doing some adjustments, giving you a rough estimate. And they give you a written rough estimate that the property value is $800,000. Now this is your deemed disposition cost or price or value, which means that let's say if you move to US or if you move out of Canada for 3, 4, 5 years, and if you come back, then if the property value has gained from $800,000 to let's say $1 million, then you only pay capital gain on the value of the property going from $800,000 to $1 million. You don't pay any capital gain from $500,000 to $800,000 because you already told CRA that now your property value is $800,000 and you don't pay tax on the capital gains for the period you were a resident of Canada, a resident of that property. Now, once you moved out, Now, whatever gains will come on top of $800,000, you will be paying tax on it. So this is one implication that may happen in Canada. Now, one more important call out. In case you're someone like me who transfers money globally, could be Middle East, South Asia, between US and Canada, then this app that I've been using is highly recommended because they offer the best rates. They offer instant money transfer as well. I will leave the link to this app in the description of this video. Do check them out. And if you use the link, you will also be getting a $10 to $20 credit on your money transfer. So I highly recommend you check them out. The second part is the US side, which is now if you go in US, does US also consider that capital gain from $500,000 to $800,000 is tax-free? No, they don't. So for instance, if you are in US and you sell the property, then you'll have to pay taxes on it. However, in US, you can also get a benefit which can help you reduce this tax impact, because now if you are in US and you sell the property, this capital gain of $500,000 to $800,000, which is $300,000, is taxable. They don't see $800,000 as deemed disposition. They will start calculating the gains starting $500,000. So now you may be at risk of paying taxation in US if you sell the property once you come to US. So one option is you sell the property in Canada before coming to US, or the second option is to get the tax credit benefit in US against that capital gain. So let me talk about that as to what that benefit is. So here in US, you can get a tax benefit on your principal residence sale if you've lived in that property for 24 months out of 5 years, which is if you've lived in that property for 2 years out of 5 years, then that property is considered as your principal residence. And in case you sell that property, any capital gain up to $250,000 is tax exempt. And if you have a spouse and both of you own the property, then it's $250,000 for each one of you, which adds up to become $500,000. So let's say I move to US and after 2 years, I decide I want to sell the property. The capital gain on the property is $300,000. So all of that $300,000, since it is under $500,000, which is $250,000 for me, $250,000 for my wife, then all that $300,000 is tax exempt. If my capital gain was more than $500,000, so any dollar which is over and above the $500,000 of capital gain would be taxed. So let's say I bought a property for $500,000. At the time I'm selling the property, it is for 1.1 million. So the capital gain is $600,000. I'm in US and I moved to US like 2 years back, and in 2 years time, I'm planning to sell the property. Then I have to pay capital gain tax on $100,000 only. So the capital gain is $600,000, out of which $500,000 is tax exempt. Assuming that the property is owned by me and my wife or spouse together, then $500,000 is tax exempt. Only $100,000 will be taxed. Now, if I sell the property after 3 years, after moving to US and then spending 3 years here, and after 3 years when I sell the property, now I will have to pay capital gain tax on every dollar of capital gain. So those $500,000 or $250,000 on individual will not be applied as a tax exempt. So the idea is, if you've decided that you have moved to US for good and you will be living here for a very long period and you would be needing that money, then you rather sell that property within the first 3 years of moving to US. Why 3 years? Because the logic is that you should have lived in that property for 2 years out of 5 years. So 2 years you were in Canada, you lived in that property, it became your principal residence. Now you have another 3 years before which you can sell the property and get the benefit of this $500,000 waiver or tax exempt or tax credit. If you don't sell your property within 3 years, then your property will be taxed normally, just as if it was bought at $500,000, and whatever is the capital gain on it will be entirely taxed, which can be a huge tax bill in US. So even if you're not paying this tax in Canada, because Canada considers all the capital gain from $500,000 to $800,000 tax exempt. However, when you sell this property while being in US, after 3 years of you being in US, then you pay capital gain tax on that $300,000, assuming you bought the property for $500,000 and selling it for $800,000. Also here note, there is another challenge, which is if you think that, yes, I won't sell the property, but after a couple of years, I will just move back. Now, you can certainly move back after working for 4, 5, 6, 7 years, or no matter how many years you want to work in US. However, if you've applied for a green card, and once you have your green card, even if you move back to Canada while having your green card, then all the tax rules of US will still apply to you. So even if you move back and you don't recapture that property as your principal residence and keep it on rental and want to sell it, then that rule will still apply. You'll still have to pay taxes in US. So much so that even if you give away your green card, assuming you've held your green card for around 8 years, and even after that, when you renounce your green card, you give it away and you say, okay, I'm done with all this taxation, I don't want US taxation, even then for a couple of years, you'll still have to pay taxes in US, even after losing your green card. So this is very important that you're careful and you know exactly how to plan your future. You know where you will be living, which properties you will be buying, which investments you will be selling. All of this should be very clear to you. Hence, it is very important that you consult and connect with a tax agent, tax lawyer, tax accountant, and get all this advice. Again, the purpose of this video is not to give you tax advice. It is just to make you aware with regards to what kind of questions you should be asking your tax accountant when you are in a position where you are leaving Canada, or you are leaving Canada and moving to US. Hopefully this video was helpful. By the way, apart from just principal residence consideration, I have other tips as well, which I got from the tax briefing, which is how do you manage your TFSA account, RRSP account, RESP account, pension account, all of this, because all of those also have tax implications. If you have stocks invested in Canada, they also have tax implications. If you are interested in knowing about them as well, leave me a comment and let me know what your questions are, and I can use those briefing and give you my notes and share with you how I was impacted, what were the implications on me, which will give you some guidance in terms of how you should go about your move. Thank you for watching this video, and please do like and subscribe as well. Thank you.